Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Welcome everybody to the Daily Market Commentary. I am your host, Charlie Fulkerson, joined by my dad, Chuck Fulkerson.
Hey everybody, welcome. It's a Friday edition. We are about to kick off the week, and we are getting absolutely bearish in the markets today. We've had kind of a bearish week. For those of you new to the channel, do me a favor. Click that subscribe button down below, and also the notification bell so you get the updates when the new trades come out. We had a live trading room yesterday, so a lot of the lines that we have on here today are from yesterday's live trading room. And I want to talk a lot about kind of what happened yesterday in market movement, because we did get a bit of a rally yesterday. But that rally, in my mind, was just a short covering rally. And so, you know, hopefully those of you that were in the room, if you were in the room, leave a comment section down below. But I want to talk about where we identified yesterday's turning point in the afternoon, and really why that turning point occurred. So I've got a couple of lines in here. This was actually target 1 and target 2 off of our short from this region up here, and the red line was taking our stop and moving it down from the live trade room. But we were yesterday in the live trade room looking at a market that had rallied back up in the overnight hours. And my thought is that we were going to continue a little bit of the bullish run, but I felt like the bullish run that we were getting last night and into 2 nights ago and into yesterday during the early part of the day was simply a short covering rally. And that's exactly what happened. It rallied back up into what was a very nice reversal area. Now, this reversal area wound up being the good opportunity for a short entry. And now we're seeing price really just fall off of that zone. When I can no longer use this level again, but this was a really nice trade. Leave me a comment section, leave something in the comments down below if you were able to catch this short. And even if, you know, we didn't do a daily market commentary yesterday because of the live trading room, but we still, hopefully you were able to catch that particular entry. So now we've started our next move down, and we have some news coming out today. But the news coming out today, is going to definitely serve to drive the markets one way or the other. And our next big area is going to be down here, right? We think about, you know, I teach Charlie about the mountains and the slides. And as we come back to the bottom of a mountain, typically who's going to take over in that, Charlie?
Wait.
In the bottom of a mountain, it's going to go which way?
Up. And that is bears?
No, bulls.
Bulls?
Bulls take over when it goes up. Bears take over when it goes down. Yeah, that's okay. That's all right. That's why you're still 6. You're allowed to get those confused. There's some adults that still get them confused. So when we're looking at this would be the area where if price returns and we think it's going to go which way, Charlie?
Up.
Which button do we push if we think it's going to go up?
Buy.
We push the buy button. So this is a potential reversal point. Now, here's my only problem with that. Right now, on a 4-hour chart, the trend is definitely to the downside. On a daily chart, our trend is definitely to the downside. On a weekly chart, our trend is still not yet to the downside because I don't have lower swing lows and lower swing highs. However, we've essentially erased all of 2018's market movements. On the S&P, we're still a bit higher than our low back in February. On the Nasdaq, we are still a bit higher than our low back in February, but just barely, right? So on the ES, I am definitely a little bit more of the bearish ilk right now than I am the bullish. But we are coming to a potential reversal point off of this 4-hour pivot. I'm not saying I would take it, by the way. I'm not willing to go long until we start to put in higher swing lows and higher swing highs. Right, higher swing lows and higher swing highs.
Highs.
You want to say high every time?
Highs.
Highs. Higher swing lows and higher swing highs.
Highs.
And once we get those, then I'll have the ability to ride this thing back up. So until then, what I'm going to do now is wait for some sort of a potential reversal entry. If we get good news on our numbers this morning, and we get a rally up, that could be a signal just to re-enter. And right now, my signal for re-entry on the smaller time period is going to be this little level right here. So if we come out with good news, that 2,700 level now becomes a pretty strong resistance point for price to kind of come back up into here and to see price come back down. Next would be the Nasdaq. Now in the NQ, prices are really, really going which way, Charlie?
Down.
Prices are really going down. Now, if I look at this NQ, this is the top of a slide. And at the top of a slide, that's the origin of price falling. And right in this area, we know that buyers and sellers had to have a little period of equilibrium. Well, that little period of equilibrium was very short-lived because we immediately fell from there. But we are also coming to our 4-hour area of possible demand. Still in a downward trend. I'm not willing to take this long yet. I need a higher swing high and a higher swing low. So in the meantime, we've got a level set up in the S&P. I could also set up a level in the Nasdaq around a similar time period, going to a 1-hour chart. If we get good news today of our announcement, it could drive us back up into this region. This could be another opportunity to get short, somewhere up in that 68.20 area. Now, let's go over and take a look at crude oil. So in crude oil, we see this area here where we've bounced how many times, Charlie? 1, 2, almost
3 times.
3 times.
And for you that get that white out of your head, has to bounce a few times before it goes through.
That's right. It's got to bounce a few times because right now, this is acting as the what? What is this blue line acting as?
The floor.
The floor. And once price breaks down below the floor, what's it going to do? It's going to keep going until what?
It hits a new floor.
Keeps going until it hits a new floor. So keep that in mind, everybody out there, is that price will fall until it hits a new floor. Well, my newest, once I get below this area here, I don't have another floor until around, call it 64.50, 64.70. In that range down here would be our new floor. So there's plenty of room for price to fall if we break below this particular floor. Now, we had a nice reversal off of this area here from the daily market commentary on Wednesday. Hopefully you were able to catch that short. I'm going to remove it at this point. It was still in the area, but we had to remove it after that next encroachment. Charlie's suffering from a bit of a cold this morning. So I'm still going to, be this level is still valid up above us, but I took it off because I just, if we do break out above there, there's a chance it'll rally up to here. So I don't want to take another shot at that short up in this region. I'd rather wait for a breakdown below this area. Gold. In gold, we have again the picture of a floor. We also have this area here, which is the picture of a ceiling. Right. And if it breaks through the ceiling, the opposite happens of the floor. But remember, it can't just break through one time. It's got to touch that level a few times, right? It's got to touch that level a few times because every time it goes up and touches the level, what's it doing to that ceiling, Charlie? Is it making it stronger or making it weaker?
Making it weaker.
Right. And once that ceiling's weak enough and it goes up strong, it's going to do what to that ceiling? That's the noise for breaking of a ceiling. Good job, Charlie. So I would look at right now, that is gold. And gold, especially if the markets have a pretty big sell-off, is considered a safe haven. So let's see what that looks like. Now, bonds. In the bond market yesterday, in our daily live trading room, we had taken a look at this potential entry. And it was a good potential entry. Unfortunately, it missed entry. So once we came close to it, it's still valid. It's just going to change my line from solid to dashed, which means that I'm waiting for price to come back into here and I'd get long as it rallies back out. Now, we did make it up to our reversal level up here, 119 by 119.35. Unfortunately, we've got to get halfway into the level before the trade is activated. So we may get a move down out of it, but it's not activated as of yet. So keep that area in mind. Taking a look at our currencies, Great British Pound. So yesterday we had a Great British Pound breakout short, and that short worked out really well. Hit target 1. Stop was moved down after hitting target 1, and now it has hit target 2. So We have seen both target 1 as well as target 2 be hit on the Great British Pound breakout. So now I've got to remove this level and all of our lines that led up to it to look for our next entry and our next potential opportunity. So looking at this from our next potential opportunity standpoint, obviously we're in a very strong downward trend on the hourly chart. On the 4-hour chart, this area here was an old floor area from back in the day, if you will. And I think there's room for price to continue to fall. I think there's room for price to continue to fall until we get to this area back in here. So this area back in here is really my next potential area for where I think we would see price stop. So if you're still in that trade and you want to let your profits run, you've got some room to roam on that British pound. Japanese yen, we're coming to a potential reversal area up here. Price needs to get a bit higher. We've not come into that area as of yet. Now, I wouldn't take a breakout long on this yet, and we talked about this yesterday, because I don't have room to roam. While this is setting up for a breakout long, I don't have room to roam because of this potential reversal up here. So keep that reversal area in mind going forward. On the Aussie, the Euro, and the Canadian, on the Aussie dollar, we had set up a potential reversal on the long side. Unfortunately, it did not come to fruition as we sold off pretty hard in that market. We did get a breakdown below here, and while I didn't identify it in the room because it occurred later in the day, this could have been an opportunity for a breakout short. The problem is that you've got a really wide stop on there because it's above your last prior pivot. But it did, on that move, set up a potential for a reversal right there, where we have that one little candlestick before a little move down. Now, this is a very weak time of the day to create a level, so I've actually at that point got to widen the level out to include this whole area. I'm gonna move this line up here. There we go. So it's got to be a fairly wide level at that point, but this would be our next reversal point, our next area. In the euro, we had a breakdown earlier, and now we're kind of coming to. I got to go all the way up to the daily chart to see the level of potential demand that we're coming to way down in here. Off of the 4-hour chart, we've got an area right in here that we're coming to where we could see a bit of a reversal. If we do get a decent reversal, which I don't think we're going to get a strong enough reversal to take us up, this would be our next point of entry on a reversal. And then on the Canadian dollar, we've hit our breakdown to the Canadian dollar. Your stop would be above this 76.93 area. So take your stop. If we reverse from kind of where we are now, you would take your stop and you'd move it down because we broke through that floor. And once we break through that floor, it kind of continues its move which way, Charlie?
Down until it hits a new floor, which you hadn't put yet.
I haven't put the new floor yet, so I'd have to go out to the bigger time period to look for the new floor, and I don't think I've got a new floor until probably down in here eventually. So there's plenty of room for that thing to continue to roam. So a lot of big movements this week, and if you missed out on some of the big movements, don't allow yourself to get frustrated. I think that we're going to have another, the bearish market seems to be coming in and taking over a little bit on the big picture side. Looking at this on a daily chart, the S&P is actually finally below its 200-day moving average. We're well below our 50-week moving average, and so the S&P is kind of showing us a little bit of weakness. A lot of professional investors out there are saying that it's now bearish. A lot of other professional investors are saying it's now a time to acquire more and to be bullish. What I think out from a big picture standpoint is that we've had no fundamental catalyst to, there's no housing crisis. There's no There's no housing crisis. There's no tech bubble. There's, none of these things that cause a 40 or 50%, market collapse. However, we are definitely way overvalued in a lot of stocks, and so I think we're in a period of a time where we're going to see a decent pullback, and that pullback could occur, for a while, until it hits some substantial demand, and so that substantial demand, we're coming into an area where there could be some we could continue to go a bit lower. So just I was as always, I believe in maintaining caution in your portfolio, and just know where your line in the sand is in case the market sells off a little too much. I don't think we've quite hit that full line in the sand yet, but we're getting really close to it. As we kind of come back down, we're getting close to that demand on a monthly level. So until the weekend edition, I hope you guys all have a great trading day. Charlie, tell everybody goodbye.
Bye. And don't forget to push that subscribe button down below. See ya!